Hello and welcome to the Konvergent video series for the week of November 23rd. Top three things we're going to cover on the video this week. First, the markets were down slightly on the week last week in spite of a second straight week of positive vaccine news. Two, we're going to touch on some mixed economic data. And finally, we're going to touch on stock market bubbles and whether it matters at all right now. But before we jump into the data, I hope you all had a great weekend. It is Thanksgiving week, and I just wanted to let all of you know how grateful that we are for the relationships that we have with you and the opportunity to serve you. You know, it's been a challenging year with everything going on. We've had to adapt our business in many ways to continue to serve you, and just I wanted you to know how hard we're working to continue to find new ways to bring more value to the relationship we have with you. You know, I also wanted to express my gratitude for our staff and our families who've been there to support us, you know, in all of our efforts this year. So I want to wish you all a happy Thanksgiving. You know, I know also this year we're having to make decisions on how we're going to celebrate everything this year, but just know that we're thinking of you and we're thankful for the relationships that we have with you. So on to the data for the week. The markets were down just about 0.75% on the week last week, at least on the S&P 500, and the pattern looked very similar to the week before, with the market spiking early in the week as we got the Moderna vaccine news and then fading throughout the week. And so when we look at the last couple of weeks, first Pfizer 2 weeks ago, then Moderna last week, the markets are barely up at all in spite of this great news on the vaccine front. And we saw a little bit more of it again early this week with AstraZeneca releasing their data early on Monday before the market opened, and saw a similar jump up in the market. So we'll have to see with the short week with Thanksgiving what kind of happens throughout the week with market volatility and whether this small rally at the beginning of this week fades similar to those others. So on to some economic data for the week. On unemployment, you know, we've been following this very closely with you all for the last 6 months, and we've seen a recent spike in the last week with new claims for unemployment, mostly probably due to the additional lockdowns we're seeing. So we're now above 1 million still when we combined new state claims for unemployment along with the new pandemic claims for unemployment. On the continuing claims front, though, we do continue to see a drop in those numbers. We're down to about a 6 million total number on continuing claims, and total claims for unemployment are down to about 20 million. And so another large drop there in the last week. However, as we've been noting on these videos, we believe a lot more of that is related to people actually falling out of the jobs market and falling out of these eligibility for these programs. And you can see that in some of the other data that we're seeing right now, which is the large amount of people moving from temporary unemployment to permanent unemployment. And so it is a little troubling that in spite of, you know, the positive movement we've seen in the last few months on total economic recovery, we're not seeing that yet in the jobs market overall. One area that we did see some positive news last week, though, was on the real estate front. So we saw existing home sales spike again in the last month. So that's been one of the areas that's been a massive outperformer this year, especially since probably the last 6 months or so. However, inventory is getting really tight, and so it'll be tough to see this number continue to go up to these levels. But real estate's definitely been one of those areas supporting the market this year. So with that, let's touch on bubbles and whether anything around what we're seeing right now matters anymore in terms of the data. So markets are near all-time highs. We've seen nothing but positive vaccine headlines in the last few weeks. There's still this big expectation of a new stimulus program coming out in the next few weeks, if not at least the next couple of months. And one big thing coming into 2021 is we're going to go from a year where the comparables were very difficult as we went into this recession to very positive. So any positive move in economic data in 2021 is going to look extremely good compared to the economic data that came out in 2020. So all of those factors seem to be very big tailwinds to the market heading into 2021. However, if we look at the market overall, we're near these all-time highs, and there's all these other data points showing that we seem to be continuing to inflate this bubble. And one of the big reasons and contributors to that is this whole COVID play. So the stocks that did the best because of the COVID pandemic, and really the top 10 names are all these technology names, the Facebooks, the Microsofts, the Amazons of the world, the Zooms of the world have done so well. If you take those names out of the market, the stock market's barely up on the year, and so probably would be much closer to historical correlations if not for those top 10 names. Another big driver of this the divergence has been the amount of stimulus coming in from the Fed and the Treasury through the CARES Act and some of the other programs going on. And so we've seen this massive increase in the Fed balance sheet, which has pretty much matched the rise in the stock market. And so, going into 2021, while all those other tailwinds we discussed are out there, what if some of these tailwinds that we've seen in the last part of 2020, what if they don't materialize into 2021? Could we see some level of volatility, being that we're at these all-time highs in the stock market? So right now, a lot of these historical data points don't seem to matter very much. Right now, fundamentals, really don't seem to matter at all. It's really much more of a narrative game, and the narrative is vaccine are continuing to develop and are going to be very positive for the markets in 2021. We're going to get more stimulus, and all the comparables are going to be much better as we get the market or in the economy back growing again in 2021. So right now, that's how we're starting to think about how we're going to be managing portfolios, at least in the near term. But always we'll be keeping an eye on some of these triggers that could lead to more volatility. So with that, as always, if you have any individual questions on your situation, please feel free to reach out. Otherwise, we hope you have a great week and a great Thanksgiving, and we look forward to talking to you soon.